Hello everyone. This video is about industry analysis. Industry analysis. An industry is a group of firms that have similar technological structure of production and produce similar products. An analysis of the performance, prospectus and problems of an industry of interest is known as industry analysis. The economic analysis gives an indication about the direction of economy and the stock market. Industry analysis is required because the return and risk levels of industries differs. The risk factors related to the automobile industry are different from those related to the information technology industry. The performance of an industry reflects the performance of the companies it consists of. Industry analysis is the second part of fundamental analysis. Before making any investment decision, we have to study the economy. Once it is done, we have to study the industry in which we are going to invest our money. It is impossible to forecast exactly which industrial grouping will appreciate in the future, but a careful analysis can suggest which industry has the brighter future than other industries. Therefore, industrial analysis is very essential. Factors affecting industry analysis. There are three parts: industry life cycle, nature and structure of the industry, profit potential of the industry. Everything affects the industrial analysis in one or the other way. Let's see the different things coming under these three parts of the factors. Industry life cycle. The life cycle of the industry is separated into four well-defined stages as given. First one, pioneering stage. Second, rapid growth stage. Third one, maturity and stabilization stage. Fourth one is declining stage. Pioneering stage. In this stage, the prospective demand for the product is promising and the technology of the product is low. The demand for the product encourages many producers to produce that particular product. There is severe competition and only the fittest companies survive in this stage. In this situation, it is difficult to select companies for investment because the survival rate is unknown. Pioneering stage is the initial stage of every industry. Here the product and the technology, everything is new. Predicting the success rate of these industry is difficult. Therefore, it is very risky to invest in those industries which are coming under pioneering stage. Rapid growth stage. The companies that have withstood the competition steadily improve their market share and financial performance. The technology used in production improves, resulting in low cost of production and good quality products. The companies have stable growth rate in this stage and they declare dividend to their shareholders. It is advisable to invest in the shares of these companies. Since it is a growing stage, the people will recognize the product of these companies. The low cost of production, high quality, etc. increase the demand of these products. Therefore, it is very good to invest in the companies which are coming under rapid growth stage. Third one, maturity and stabilization stage. In the stabilization stage, the growth rate tends to moderate. Symptoms of obsolescence may appear in technology. To keep going, technological innovation in the production process and products have to be introduced. Investor must closely monitor the events that take place in the maturity stage of the industry. Here, the industry starts to show a stable performance, but slowly the industrial technology will start to become old. Therefore, constant monitoring is needed if you are investing your money in those industries which are coming under maturity or stabilization stage. Declining stage. In this stage, the demand for the particular product and the earnings of the companies in the industry decline. Innovation and changes in the consumer preferences lead to this stage. It becomes investing in the shares of low growth industry even in during boom. Here the technology becomes completely obsolete. So not investing in these kinds of industry is very good, because if you invest your money in these kinds of industry, you will lose your money. These are the different factors which are coming under industry life cycle, which are affecting the performance of the industry. These are the different stages, that is initial stage or growth stage or maturity stage or decline stage. Every stage affect the industry in different ways. Therefore, studying the industrial life cycle is very essential. On the basis of nature and structure of the industry, we have several factors which has impact on industry analysis, and they are as follows. First one, growth of the industry. The historical performance of the industry in terms of growth and profitability should be analyzed. The past variability in the return and growth in reaction to macroeconomic factors provide an insight into the future. Even though history may not repeat in exact manner, by looking into the past growth of the industry, an analyst can predict the future. Studying the past performance always gives an insight about the performance of the industry over the years. Investor can predict the future prices on the basis of their past performances. Therefore, growth of the industry should be analyzed before taking investment decisions. Second one, cost structure and profitability. The cost structure, that is the proportions fixed and variable costs, affect the cost of production and profitability of the firm. The higher the fixed cost component, the greater is the sales volume required to reach the firm's break-even point. Lower the fixed cost, the easier it is to adjust to changing demand and reach the break-even point. Cost of production plays very important role in fixing the prices of commodities. Therefore, an analyzer must analyze the cost structure and profitability of industry. Nature of the product. The products produced by industries are demanded by consumers and other industries. An investor must analyze the condition of the feeder industry as well as the end user industry to assess the demand for the industrial goods. In the case of consumer goods industry, the changes in the consumer preferences, technological innovation and substitute products affect demand. Here the product may be industrial products or consumer goods. Studying about the nature of the product is very essential, because the performance of the industry differs based on the nature of the products. Fourth one, nature of the competition. The nature of competition is an essential factor that determines the demand for the particular product. Its profitability and price of the scrip concerned. The investor, before investing in the scrip of a company, should analyze the market share of the particular product and compare it with the top 5 companies. Here, if the competition is higher, predicting the potential of the industry's survival chances becomes difficult. Therefore, nature of the competition should be analyzed before taking any kind of investment decisions. Government policies. Government policies affect the very nerve of the industry and affect the different firm, and effects differ from industry to industry. When selecting an industry, government policy regarding the particular industry should be carefully evaluated. Here the policies can affect the industry in different way. It may be positive way or negative way. Therefore, studying the government policy is very essential. Labor. The analysis of the labor scenario in a particular industry is of a greater importance. The number of trade unions and their operating mode have an impact on the labor productivity and modernization of the industry. Labor is one of the important factor that has to be analyzed, because if the laborers have problems, it will have impact on the industrial performance in a negative way. Therefore, labor should be analyzed. Research and development. For any industry to survive the competition in the national and international markets, the product and production process have to be technically competitive. The percentage of the expenditure on research and development should be studied diligently before making an investment. Here, to survive in the market, research and development is very essential. Therefore, the company, before investing, the investor should see whether the industry is investing more in research and development activities. It is very essential. That is about nature and structure of the industry. The growth of the industry, the cost structure, the profitability, nature of the product, nature of competition, government policy, labor, research and development. Everything is affecting the industrial performance in one or the other way. Therefore, these factors should be analyzed. The next is profit potential of the industry. Threat of new entrants. New entrants add capacity, inflate cost, push price down, reduce profitability. If many new firms are entering into the industry, the competition will be higher. Therefore, it is a threat. It can reduce the profitability of the industry. Therefore, it is very essential to see whether the opportunity for new entrants is high or low. Rivalry between the existing firms. Firms in an industry compete on the basis of price, quality, promotion, service, and so on. If rivalry is stronger, the profitability is lower. Firms in an industry have competition. If it can cause severe problems if it is out of control. Therefore, we have to see whether the competition is healthy or negative. Pressure from substitute products. Performing the same function as the products of the industry, substitute products may limit the profit potential of the industry. Here there are products which are similar to the product of the one industry. They are called substitutes. Having many substitutes is not good for any industry because the consumer may choose other products than the industrial products. Therefore, the substitute also plays important role in the profit potential of every industry. That is the third part, that is threat of new entrants. If new entrants are allowed more, profitability will be less. Rivalry between the existing firms are higher, then profitability will be less. Pressure from the substitute. If the industry has many substitute products, the profitability will be less. That is about the different factors which are affecting the industry analysis. Once the economic analysis is done, investor should decide the type of industry in which he is going to invest his money. Industrial analysis helps him to choose the right type of industry in which he should invest his money. Then once the industry is selected, the investor should do a company analysis in order to select the type of company in which he is going to invest his money. It is the third part of fundamental analysis, and this is all about industrial analysis. Thank you.